Good evening. This side, Rahul Magan here. As you very well understand that, and many of those who know me personally, they are well aware that I worked around 10 years as a corporate treasurer. And today also, I'm very active in treasury market. I'm a strong believer of the fact that in the world of corporate finance, there is definitely one asset class which is unfortunately not getting the fame which that asset class deserves. Now, that asset class is nothing but the structured finance. On time to time basis, I am talking about a very important topic which is technically known as structured finance. Ladies and gentlemen, I strongly feel that, though it is not written in books, but I feel that the world of finance is divided into three to four categories. Number one is the traditional finance. Traditional finance includes loans, deposits, credit cards, and all these things. Second is the corporate finance. Corporate finance includes which is coming at the level of a corporate, like a working capital loan, facility agreement, trade finance instruments like standby letter of credit, bank guarantee, so on and so forth. And third comes the business finance. Now, business finance is a little diplomatic term. I title this to be an investment banking, which is definitely a specialized arm. And I completely regard that because having said that, I strongly feel that investment banking is a specialized arm in the world of financial market. It's never been the cup of tea for everybody, and especially when it comes to valuation and the relevant regulatory in the investment banking. And fourth and very important is the structured finance. Now, structured finance, I strongly believe, is an arm of financial engineering. In my personal library, I have a lot of books about the financial engineering. Of course, time is definitely a constraint, but as soon as I'm finding time, I'm reading the financial engineering because I really like that. I strongly feel that there is a hell lot of job is supposed to happen in the world of structured finance, especially when the Basel 3 and subsequently the Basel 4 coming up into the picture. According to the public information, somewhere 2025, Basel 3 is coming up into the picture. But considering the global economical, global geopolitical situation, the wars, the huge quantum of debt in the books of XYZ governments, the uncertainty over the interest rate, and there are multiple such considerations, I doubt whether we are technically sound to have Basel 3 on the board. Because once Basel 3 would be on the board in this eventuality, it would be very hard for few banks, names XYZ, to manage the show. And God forbid if the other regulations, which we link the other local regulations, because every country is having a set of local regulations, like India is having local regulations, Singapore is having local regulation, European Union is having local regulations. So there are many countries who are having their local regulations. So if we take these local regulations along with the Basel 3, then I doubt it would be a little catastrophe or a kind of deadlock in the world of financial market. But like I always said, that I am not a decision maker. The decision maker are other people. They need to take up a call whether it is a right time to have Basel 3 or not. But ladies and gentlemen, I strongly feel that the world of structured finance is something which is really very important and getting important as the day progresses. Without quoting any specific name or any specific event, let me tell you that from the last couple of months, though I was not very active on the YouTube and other media platforms from the last couple of months, but that doesn't mean that I'm not doing my studies in the finance and I was not reading the newspapers, the magazines, not getting myself updated. This is definitely a wrong thing to say. I'm trying to see a direct interplay between structured finance and merger and acquisitions. Ladies and gentlemen, those who are not technically aware that interplay means when one thing, say X, is connected with another thing, say Y, which means if we make any small change in X, then we'll see an impact in Y. On the contrary, if we see that if we make changes in the Y, we see the changes in the X also. Now, this is called reverse interplay. Now, ladies and gentlemen, I noticed that in few cases where XYZ M&A hasn't happened in the world of financial market, there is a substantial role which is played by the structured finance. And when I'm using the word structured finance, I mean to say that the relevant instruments being created, and these instruments are created to generate a payoff. So let me tell you that what exactly is going on, and this is very conducive. Let me tell you, I'm very positive on that, and I strongly feel that if this effort was done 10 years ago, it might have better. But anyways, now what is going on that when you do a merger and acquisition? Now, merger and acquisition is of many kind. We need to know that there are merger and acquisitions who are very simple in nature. There are merger and acquisitions who are highly complicated in nature. Henceforth, generalizing that merger and acquisition is one and only thing is extremely incorrect. Merger and acquisitions is completely case to case. Completely case to case. And now merger and acquisitions is completely derived out of earnouts. Now, earnout in a hardcore technical or an accounting parlance is known as contingent consideration. Now, contingent consideration means that the payoff depend upon many factors. So let me give you a very simplistic example that X company is buying Y company. And suppose Y company is an IT company, assuming just hypothetical example, and Y company is saying that they are making a chip, and once the relevant chip is ready, and this chip would increase the speed of the processor by 4 times as compared to today. Just a hypothetical example. Now, when that X company is buying Y company, now Y company is saying that they are making a chip which will probably take another 2-3 years down the line, but their research is going on, and this is are the papers which they are producing on record. This is the lab and so on and so forth. Now, ladies and gentlemen, when X is pricing Y, X is wisely aware that Y is working on that chip, but X don't want it to discount all the factors of the chip right now. Because God knows tomorrow some competitor of the Y would come, say Z, and say that I have a chip which is already ready. On the contrary, the Y is working on that chip. They decide a comp. Comp means the compensation. They will say that once the chip comes in market, and that chip, that relevant company Y started installing the chip in the computers, and suppose, let's take a hypothetical example, the processor speed goes by 4 times, then they will pay whatever 1 billion, take any hypothetical figure, to that company. Now, this is called payoff. Now, ladies and gentlemen, this is the one face of the coin, that once this chip would come, they would pay. I completely regard that. I'm not denying that. It is not that I'm denying that. But having said that, how would you arrange the funding? What would if the chip comes in the market after 3-4 years, and all of a sudden after 3-4 years that the processor speed increased by 3 times, and whatever the Y has said at the time of the acquisition turned true? Who will pay at that point of time? This is the first question. And second question is, who would pay when you are doing the acquisition. Let's take another hypothetical example that this acquisition is $25 billion, just hypothetical figure. And the value of that earnout, whatever the chip is supposed to come, is another 10 billion, which means 25 plus 10 equal to $35 billion, which is definitely not a small amount for any company except few. Now, having said that, that 25 plus 10 needs to arrange, and that is not a cup of tea. That is a hardcore job because you are supposed to interact with the investment bankers, wealthy investment bankers who can create a funding line for you. It may be syndicated, it may not be syndicated, but considering the fact that the 25 plus 10 equal $35 billion is at stake, so there is definitely a high probability, I repeat, there is definitely a high probability that the syndicated lines to be created. Now, ladies and gentlemen, we need to see that when we are creating that structure, this structure can't be a traditional finance structure. No, we can't say that this is a traditional finance structure because traditionally the things like earnouts, payoffs, these things were not there. We cannot say it is a regular funding by a corporate because a corporate can't have the regular funding like that. Corporate don't need $35 billion on every possible day. Now this comes under structured finance. Henceforth, one thing which I am noticing is that the coverage area of the structured finance is rising on a every possible day. I completely regard that the structured finance is for a very limited people, not everyone able to understand that structured finance. But ladies and gentlemen, one thing which we need to understand in structured finance is that it is beyond imagination. You can't say that a product which was used in whatever XYZ case is applicable here also. That is the reason the word structured is used because structured is something which means that it is created for a specific purpose, for a specific payoff, and that is a very important thing which we need to learn. Henceforth, ladies and gentlemen, what I can envisage is that probably 10 years down the line, I don't know how many wars would happen 10 years down the line, how many geopolitical conflicts would happen 10 years down the line. I do not know this about. But having said that, what I can envisage that as the time would progress, the world of investment banking along with the world of structured finance would grow. And the growth may be multiple times as compared to what we are envisaging. Having said that, one thing which is very clear to me that the growth is definitely coming out from the global financial centers, which includes United States, European Union, probably Singapore, Dubai, and all. But having said that, it is very hard to say out of these financial centers or the global financial centers or the regional financial centers who will take up the lead. It is very hard to say who will take up the lead and till what extent that relevant country or a relevant bank in the relevant country is able to take the lead. We are not sure about this because there are n number of factors that will decide this, and these n number of factors are beyond my jurisdiction. But having said that, ladies and gentlemen, I remember that in 2007 when I passed out, when I done with my MBA, Masters in Business Administration, there was hardly any talk in structured finance. Hardly. Of course, there were books at that point of time, but bare minimum text is available on the internet as far as the structured finance is concerned. But now, as the time is progressing, probably after, and I would say 15, 16 years of the pass out, I have noticed that the volume and the growth and the instruments of the structured finance has grown tremendously, manyfold. It is hard to say that how many times it has grown as compared to my pass out in 2007. And probably 10 years down the line, but I can clearly envisage that this growth would be the largest to the more larger extent, and this structured finance segment would be touching each and every sphere of the business finance and investment banking. Now, let's see how this shapes up. But I'm really glad that there are people in the world of corporate finance sitting in the big banks are working tirelessly in this regard. And I'm really thank you for them for having new products coming on the board. But at the same point of time, I completely appreciate the fact that structured finance is not for everybody. Everybody cannot have structured finance, because for that you need to understand the financial market in a very delicate manner, which requires time, effort, and many other things. Thank you, ladies and gentlemen. Our next video would definitely be on a very important topic, which is called fund structuring, but this will definitely take a week or so to make. Thank you very much. This is Rahul Magan. You have my number: 9899242978. 9899242978. Thank you, ladies and gentlemen.